In today's energy markets, let's take a look at WTI crude futures as they're realizing some further selling pressure here today. We're seeing them down better than 3% on the session. In the 75 handle, 75.85 in the futures market currently, and that is a better than 5-week low when you look at the price action for the WTI space. Market is experiencing a shifting in the storyline. Some narratives are taking a little bit more of a bearish turn, it appears, and that's keeping the pressure, I think, on the futures markets. A couple things to point out today. COVID storyline, we're seeing that ramp up across the globe, and potential for further restrictions appear to be coming down the pike here. So that's, I think, having an impact on the idea of what the demand might be moving forward if this continues to roll out. Couple that with inventories increasing in Cushing. Now, I know the EIA data from a week-over-week standpoint showed a larger draw than anticipated, but we're still seeing inventories building in certain areas, particularly in Cushing, which is probably the most important region for the energy, particularly the WTI space. And the third thing I want to point out is the IEA, in this instance, indicating that they are seeing production increasing from a global perspective, and they think that supplies are going to actually increase more than what's been forecasted to this point leading into 2022. So I think all those things are having a confluence of events here. Those confluence of events, I should say, are having an impact on the markets today. Now, looking at the trends, as I mentioned, we're seeing WTI futures trading down to the lowest level in better than 5 weeks. Natural gas futures actually a little higher on the session, not a little, they're up over 2% currently. So a little bit of a dynamic there, a dispersion between natural gas futures and the WTI crude futures. The last thing I want to point out is the Baker Hughes rig count. Now, we did see an increase of 7 rigs week over week, and that's the highest level for the most active rigs since April of 2020. So we continue to see rigs coming back online. I think that's leading to why we did see maybe some of the forecast as far as production indicating that production is increasing, and that could offset some of the short supply issues that the market's experienced through the last several months. And so I want to point that with Baker Hughes rig count up 7. Now, that was all oil rigs this week. We did see natural gas rigs stay unchanged week over week. So big increase in oil rigs on the Baker Hughes rig count.